Hello, welcome to my channel. I'm called King Brand and I've been trading for the last 3 years. I've seen the ups and the downs of trading from a beginner level to a pro level. I have made money, I have lost money, but you know what? I'm gonna be helping you in the easiest simplified way. Let's dive in. Don't forget to subscribe. Thank you. Start Forex trading as a beginner in 2025. Definition of a Forex trader. A Forex trader is a person that exchanges currencies or anticipates change in currencies to make a profit. So in order to trade, you have to have two assets or two currencies. That could be the British pound versus the US dollar. Then there are three fundamentals to master in trading. One, trading strategy. This is all about your edge in the market. That means you need to have something that puts you that puts you above in the markets, like your edge. That's something that defines you. That could be supply and demand, ICT. It could be even your risk management plan, etc. And then there's risk management, and this is very crucial. And most beginners lack a very good solid foundation about money in general. So they approach trading like gambling with expectations of quick returns. Yet trading should be treated as a business. Trading is a business. That means there are losses and there are profits. So you need to minimize your losses and make more profits. Then the third is psychology. The most important, and that's where most beginners fail and before giving up. I.e., like trading is all about fear and greed, and that's what controls the market. So you'll be facing you versus you. You need to master yourself. You need to control your emotions. To control fear and greed in order to excel. In order to excel in trading. Like you see in this diagram, the trading plan, the risk and management plan, and then emotional intelligence. That's the foundation. Then we have types of traders, and there are majorly 4 types of traders. The type of trader you become depends on the time frames you use and which ones are suitable for your lifestyle. If you want quick money, then that means you will have to be a scalper. A position trader, aka is an investor, is a person that holds trades for longer periods. That could be holding a trade from a month to a week or even seemingly a full year. Then a swing trader holds trades from weeks to days to hours. That means I could enter the trade on Monday, then come out on Friday. Then a day trader is a person that holds trades within a day. That means 24 hours. I could take a trade in the morning and then come out in the evening. Like you see in the diagram below, a scalper, day trader, a swing trader, and position trader. That means if like you do a 9 to 5, then you could be a position trader or a swing trader. Like you don't have time to watch the charts and the markets for long. Then the basic requirements or apps to use while trading. The basic requirements: 1, knowledge. You need to have knowledge about the financial markets, and remember, trading is a marathon, not a sprint. It's a long term game. You will be in the markets for a very long, from 3 to 4 years to 5 years to 10 years. So the whole concept is not about giving up. You should be in the game for long. A laptop or a computer with a stable internet. A laptop could help you to analyze the charts and the markets. So you need to have a very good laptop with a stable internet. Then a phone. Any phone could work. Let me say like iOS or Android. As long as the phone is good, then you need to have apps to use. You have MT4, MT5 to execute, and they're all available on Apple Store and Play Store. Then fourthly, you need a broker. A broker is a person that leaks or gives you access to the live markets to ensure that the broker you're using is regulated and licensed. Do research more about the broker. The top 4 apps for Forex traders. One, we have a MetaTrader 4. Then there's TradingView. TradingView is used to mark out your charts and to draw charts. Then you have My FX Book. This is used to calculate your to calculate your lot size, and then keeping a journal. Then Investing.com, it helps you to analyze the news and then like check out an economic calendar. Then we have two types of analysis in trading. One is the technical analysis, and this is used like analyzing and forecasting the direction of the prices through the study of past market data and volume using the charts. So using trading view, you'll have to master how to draw the trade lines, then the chart partners, the candlesticks, and everything. So technical analysis is all about analyzing the charts, drawing the charts, analyzing the charts, doing the charts, like plotting. Like for example, I use supply and demand, and support and resistance sometimes. So you that's technical analysis. And then the apps, websites to use: TradingView, MetaTrader 4 and MetaTrader 5, analyzing your zones and waiting on price action. And this is TradingView. This is MetaTrader 4. That's how they look like. Then fundamental analysis, analyzing the economic conditions that affect the value of a country's currencies. Example: interest rates, unemployment rate, GDP, geopolitics, wars, elections. That means fundamentals. You'll have to check the background of each currency you're trading. Example: the US dollar, the British pound, the Japanese yen. You need to know the interest rate, the employment rate, the GDP per capita. Are the investors in that country expecting a recession? The wars, the climate change, geopolitics. Is the country affected by war? Like how is the currency doing? Then the apps, websites to use. We have FOREX Factory and Trading Economics. I basically use trading economics because it gives me a detailed view of the country's currency, from unemployment, retail sales, then the interest rate, consumer confidence, housing statistics, the inflation rate, the GDP growth rate. So it depends. You have to align the currencies you have on your watch list with the news that is coming in. Example could be the Japanese yen, the euro, the Swiss franc, British pound, Canadian dollar, etc. Yeah. Don't forget to subscribe. What to trade? Apart from Forex, traders have a wide range of options to trade from the financial markets. So that means that there's a lot to trade. Crypto, Bitcoin, Ethereum, XRP, Solana, Chainlink, Cardano. Then about the stocks, we have Apple, Microsoft, Meta, Nvidia. And then there are commodities. You could also trade commodities. Example could be gold, silver, crude oil, copper, soybean, electricity. So then there are indices. We have the Dow Jones Industrial Average, aka the US 30. Then there's the Nasdaq, the S&P 500. But what I could caution you is like don't be a jack of all trades. Rather have a specific niche you trade. Personally, I trade Forex, gold, and crude oil. Maybe sometimes, like when I see a setup on US 30, I could take it. Now here, like you could see like the pictorial of the indices. We have gold, we have Bitcoin, we have silver, crude oil. Then the stocks, we have Apple, we have Microsoft, we have Nasdaq is the US 100. That's an index. Then the Dow Jones, then the S&P 500. So you need to pick what is suitable for you. Then we have the currency pairs, and as a beginner, you need to trade the major currency pairs. These currencies are strong because their economies are strong too and have so much liquidity. Avoid trading minor currencies in the financial market. An example of the currency pairs of the currencies, we have the US dollar, the British pound, the euro, the Japanese yen, the Australian dollar, the Swiss franc, the Canadian dollar, the New Zealand dollar. So you need two currencies to trade. Example could be the British pound versus the US dollar. So that means that the British pound is the best currency. So that means you'll be buying the British pound, and then the US dollar, quote currency, you'll be selling the US dollar. So the major currency pairing are like this: Euro versus USD, a British pound versus the US dollar, a US dollar versus the Swiss franc, the US dollar versus the Japanese yen, the US dollar versus the Canadian dollar, Australian dollar versus the US dollar, New Zealand dollar versus the US dollar. That means these currencies are supposed to be two. There's a base and then there's a quote. That means you're either buying one and selling the other. Like example could be the euro versus the US dollar. The first currency is the base. Then the second currency is the quote. You're either buying one or selling the other. That gone. Then we have trading sessions. Trading sessions are 4, but all are not tradable. So you shall need to pick 2 sessions that you could trade. We have the London session. Being from Kampala, Uganda, East Africa, I trade the London session and the New York session. The London session starts at 11 a.m. and it ends at 6 p.m. East African time. And then the New York session starts from 3 p.m. It starts from 3 p.m. to 11 p.m. East African time. Here I made a mistake. It should be from 3 p.m. to 11 p.m. So there's a lap, and that is an overlap between the 2 sessions. That means from 3 p.m. to 10 p.m. there's an overlap. So that means there's a lot of liquidity. There's money to be made. Then we have the Tokyo session. It happens late in the night and it usually consolidates. So you need to avoid such sessions that have very few or there's less liquidity. Sydney session. It happens at night, and since I'm from East Africa, I don't trade it. And as you see, Sydney session, Tokyo session, London session, and then the New York session. So you need to pick 2 sessions that you trade: London and the New York session. Sorry about that. Remember, the foreign exchange market is the most liquid financial market in the world, and most governments and central banks, institutional investors, hedge funds being the big players that move these markets. You as a retail trader couldn't be finding yourself in the market when the big boys are out. The most traded sessions are the London session and the New York session, with a lot of liquidity, and the most impactful activities happen in between those sessions, with an overlap between the sessions. The Tokyo session is always in consolidation throughout, unless there's any big major news coming in from Japan. That could be the interest rate coming in from Japan, or it's mostly the interest rate from Japan that affects the Japanese yen. Then the common acronyms used in trading: when someone says long, it means buy; short, sell; buyers, bulls, they're buyers; bears, they're sellers; bullish, that means the market is going up, it's in an uptrend; bearish, the market is moving down, it means the market is in a downtrend; TP means take profit; SL means stop loss; risk reward means RR means risk reward; BOS, break of structure; BE, break even; HH, that's market structure, a higher high and higher low; then LL, lower low, lower high, that's also market structure. Then PIP, like in FOREX, we don't count money, we count in pips. That the PIP is percentage in profit. Then SR, that's support and resistance. Then NFP is a major news that comes from the US, and it's like how many jobs has the US economy created in a month. You need to watch out for that news. It's very, very, very volatile, and it affects the market every month. It's NFP, non-farm payroll, same as CPI, consumer price index. It's also a signal from the US economy, and it affects the markets. You need to watch out on NFP and CPI. Don't forget to subscribe. Candlesticks explained. Candlesticks show the open, close, maximum, minimum price for each time frame you are trading in. Candlesticks are used by most professional traders, banks, hedge funds, using candlestick patterns will help you determine the strength of the buyers versus the sellers in the market. Candlesticks consist of a body and a full candlestick body shows strength either by the sellers or buyers, while the candlestick wick implies weakness either way. We have bullish candlesticks and bearish candlesticks. Let me show you how these candlesticks look like. A candlestick is like this. It's like this. This is a candlestick. That's how it is. It's like this. And this you could color it any color that you want. And this is the body. This is the wick. And this is the wick. This is the wick too. Wick. This is the body. So this shows that the candle is very strong. Then you could have another candle for the sellers. You could be red. You could mark it red. Remember, this is the wick. This is the wick. You understand? And this is the body. This is the body. This is the body of the candle. That's how a candle looks like. So you need to watch how the candles look like every time you're in the market. This is how the candles look like. You need to have two candles: a bullish candle and a bearish candle, a buyer's candle and a seller's candle. Yeah, let's go back. So the basics of a candlestick. So a candlestick has an open and a close. So you need to have two. You need to have two candles, a bullish candle and a bearish candle. It has a price high and a price low. Price loses, price gains. And then we have the candlestick strength. A candlestick has to be full. You understand? So that like the way you see out in the bullish strength. First, the candle is bigger, then it loses the strength. That means like from strong to weak. So like that, a full candle shows the strength either way, buyers or sellers. So you will need to master the candles on the charts in the markets, and you need to get very good positions. Like if you're trading using the candles. Then the candlestick psychology. Buyers have total control. Buyers are in control. Buyers are gaining power. Then buyers are losing power. You understand? So that's how the whole concept of candlesticks looks like. And there are majorly two candlesticks that most professionals use. There's the hammer candlestick and then the engulfing candlestick. The hammer candlestick has a top like this. It's like a hammer. You understand? It has a very long bottom shadow. And then the engulfing partners, the bullish engulfing means like the red candle, the sellers have lost momentum and the buyers are coming in. That's the green candle you're seeing there. And then the bearish engulfing candlestick, it shows like the buyers have lost momentum and the sellers are coming in. That means that the sellers have power and they're taking over the market. Don't forget to subscribe to my channel. I'll be teaching you Forex for free. That's how the candlestick has to have a body and a wick. The bullish engulfing, the buyers are stronger and the sellers, but the buyers are stronger in the bullish engulfing. Then in the bearish engulfing, the sellers are stronger.